Welcome back. Labor Day marks the unofficial end of summer, but according to the Wall Street Journal, things are about to heat up for the IPO market. It has been a rough year of offerings, that's for sure. 2016 on track to be the worst year for IPOs since the financial crisis. So you wonder, Kevin Kelly, if in fact we are going to see more deals and if that's going to indicate a positive for the stock market, or when you have more stock, is that too much supply and that's going to suck up all the dollars out there?
It's certainly...
What's the impact on the market?
Yeah, it's certainly an interesting IPO season this year, and one of the reasons why you're seeing a flood of about 7 deals come out between now and early October is because there is an election season as well. The market's done well, volatility is low, we're up on the year. But what's actually a big takeaway from this IPO season, you can say, is that we've seen the lowest amount of deals since the crisis. So we're starting to see we're starting to see 25% of the shares that have gone public this year are up, right? So that's on average, right? So every company that's gone public this year, it's up about 25%, including Twilio, which is one of the Silicon Valley companies. The biggest IPO to come out during this season, though, is Valvoline. So that's actually a spinoff that should be coming. Investors are really excited about that.
Yeah, Valvoline, right?
Yep,
Valvoline.
Yep.
That's a name from the past.
Yeah,
Valvoline,
exactly.
right?
And it's a spinoff right now. So that's pretty interesting. 5 POs. Here's another interesting stat. 5% of the IPOs have priced above their initial range. So it's a very disciplined season. The buyers of IPOs have been really strict on pricing. So I think that's going to actually dictate a lot of market action going into this IPO season in September and October.
You make a really good point, because even though we're going to see this huge boost in IPOs right after Labor Day, the window is short-lived. Because 6 weeks into it, the uncertainty starts coming. Well, who's going to be president?
Exactly.
You know, going into the election. So you mentioned Valvoline. That's one big one. And then you've got Nutanix, a Silicon Valley software company that's going to be one of the few billion-dollar startups to debut this week as well.
Yeah, so,
the week of Labor Day.
So the great part about this IPO calendar is that there's a retail company, there's an industrial company, so a beauties company, a retail company, an industrial company. You've got a software company. So anything that the buyers want, and that's emblematic of what the bankers are doing. They're going out there and selling a bunch of different types of companies for different buyers. Well, and I'm curious, I mean, this just doesn't seem to match with the reality that I'm seeing day to day. We're growing at 1% or less, depending on who you ask. Median household income is down. When you talk to regular Americans, they're not feeling this. What we're seeing in the markets don't jive with...
That's true.
Yeah. With the reality that Americans are living. So what's the disconnect? Why? I'll tell you what the disconnect is. The disconnect is that we've seen unprecedented monetary policy actually push markets higher. So what's happened is it hasn't trickled into the earnings of companies. 60% of the gains since 2009 have been from multiple expansion. And what I mean by that is the PE multiples have gone from 14 to 15 to 16. So you're seeing the valuation of these companies grow. That's why you're seeing the IPO market starting to open up, because if you look at the market right now, it's expensive relative to its history, right? We're trading at about 17.5 times earnings when you go back to where we had peak earnings in 2014. So that's where the disconnect is. It hasn't really gone down. The Federal Reserve's monetary policies have led to a wealth effect. Yeah,
let me switch gears here, because we've got breaking news this morning, Kevin. Mylan is announcing it's going to release a generic version of the EpiPen. We've been talking about this, obviously, every day. This is a big story. It's releasing this new version of the EpiPen because it's under so much pressure, because the price of the EpiPen has gone up 400%. And the CEO is really in the corner, basically trying to explain why the price has gone up so much.
Yeah, this is a very hotbed issue, and I'm not really sure about the management of this company, because this has been in the headlines actually since last September, and they continued to raise the price of this drug. And we can see what happens to shareholders when management is just disconnected from reality. And you're seeing in the stock price, I mean, it's down from over 49 to 43 now, and it's not going to go away. They've got a really bad optics issue. They should have never raised the price again. And now they're doing damage control, but you're seeing what's happening, that it's a very convoluted and complex system in the healthcare space, right?
Well, let me tell you what she told me yesterday, and this is Heather Bresch, the CEO of Mylan, who basically is blaming the system because, you know, there are a lot of mouths to feed, if you will. And basically, she says the price is $609. This is for a 2-pack EpiPen. But she says out of the $609, Mylan only gets $274 because pharmacy benefit managers, insurers, wholesalers, retail pharmacies all take their take, and as a result, that adds to the price, and that's why the customer is paying $609. Look, you could believe it or not, but the bottom line is there are a lot of mouths to feed when it comes to drugs. But this is an ongoing issue in terms of the price of drugs, and we know what Hillary Clinton said she's going to do.
Yeah, I mean, what's so frustrating about this is that healthcare in this system is not, or in this country, it's not about healthcare. It's about getting as many people into the system as possible. It's about raw numbers, not about outcomes. And, you know, this CEO just perfectly illustrates it, and she is totally tone deaf to that. And so I wonder, you know, can she survive this as the leader of this company? I mean, it seems like they're just in a death spiral here. I mean, I watched it over the weekend, and her interviews were terrible.
Well, we know now that she actually did sell some stock, so that's, of course, one more, and it's not related, probably. You know,
no, it's not. It was under her 10b5 plan.
Exactly.
Yes. Yeah,
but it's just one more thing that's causing people to say, wait, she got this bonus, and then she sold stock, and I'm paying for this EpiPen. So it's just the optics. It doesn't look
It's
good.
really bad. And getting back to the kind of how she's blaming everybody else, I mean, Mylan pre-negotiates with the pharmacy benefit managers and everybody else. And the insurers are the ones that are actually getting blamed, but they're the ones not setting the pricing or anything, and they're passing the pricing off to consumers. Healthcare is up 6% this year. You think about everybody's gotten this tax break because oil has been low and is feeding into the gas pumps. Where's it going? It's going directly into healthcare.
Yeah. Well, I just want to say, though, you know, if you're an investor and you want to invest in life-saving drugs, you have to believe that you're going to make money on it. So to put a cap on prices, and that will shut off a lot of funding. So I'm not defending the price of this. This is ridiculous, and the price of drugs, in general. But there has to be a balance here. You can't always say that drugs should be. And
as an investor, look at companies like Johnson & Johnson. They've navigated and done it well, and they're seen as a defensive name. But they actually did very well this earnings season. Their stock is at an all-time high, and that's because they're growing in their pharmaceutical space, and they're doing it the right way.
All right, well, we'll watch that one.